Okay, I'll get cracking on the presentation here. So, as I say, thanks for everyone that's joined. Firstly, just to introduce API Global, we have been operating now since 2013, really with a mindset and goal of enabling international investors access to the global property market, offering a complete end-to-end solution, making a hassle-free process for clients and partners looking to operate overseas. As you can see on our screen, we have offices throughout the world now in a range of locations. So we have a total of 16 offices with more to come. In Asia, we have Hong Kong and Singapore, Vietnam and Thailand and Australia. In the Middle East, we have Saudi Arabia and Dubai, where myself and Lewis are based. In Africa, we have a presence in Nairobi, Lagos, Zimbabwe, South Africa. We have Johannesburg and Cape Town, Sao Paulo and Santiago in South America, and our two main offices in the UK, Manchester, and our head office situated in central London. So to start, I will touch on exactly what we do and how we do it, how we help partners and clients globally access the property market with a hassle-free end-to-end solution. I'll expand on this further shortly, but for me, this is really the main thing that stands us out from our competitors. Often companies like us might help with selling the unit, and that's where the process stops. For us, that's very much where the process begins. So firstly, just to touch on our end-to-end service, primarily we act as a research and due diligence team, making sure that any investments and project developments that we bring to the table are thoroughly vetted. We analyze and assess whether we should be working with them or not. We make sure they're credible, the financials stack up, and ultimately the developments will offer a return on investment for clients. That's primarily what we look at. At the moment, we have developments in the UK where the majority of our projects are based. We also have developments here locally in the UAE where we work with developers, also in Bali and Thailand. So that's primarily the first piece of the jigsaw. Secondly, it's about the investment advice that we give to clients and partners, making sure that there's an understanding of the true value that each development offers, presenting cash flows and making sure that the financials are understood and the financials are what a client is looking for before they make a move on anything. And they have a complete understanding of exactly what they're buying and the investment case surrounding that. And as I said earlier, that's where I believe that our competitors possibly stop the process. For us, that's very much where the process begins. So from that point, we have an in-house sales progression team, which acts for both buyer and seller, same with the solicitors, making sure that the purchase is exchanged in a timely manner, and again, seamless and hassle-free for buyers. We then also have a specialist tax and accounting team, helping clients in numerous jurisdictions purchasing properties globally. They make sure that the property is purchased in the most tax efficient manner. I won't bore you too much with that. We've got a whole tax and accounting team that can go into more detail there. But if it's setting up limited companies or SPVs, that's what they can help with. Or whether it's something more simple as clients just buying in their personal name. But we have the help and support to make sure that clients are mitigating as much tax as possible. The next piece is we have an in-house mortgage team that has access to over 100 different lenders on their panel and experience helping clients globally access lending for developments in the UK and UAE. Again, it's a hassle-free, seamless process where this team specializes in helping clients investing overseas. And finally, once the unit is complete, we also have a lettings and management team now managing close to 2,000 units throughout the UK, which do everything from tenant sourcing, tenant vetting, making sure that they pass the relevant checks, and ultimately we get good quality long-term tenants in the properties, which then essentially starts to generate an income for the investor in the form of rental income. They also deal with the day-to-day management of the property and make sure that should there be any issues, that an investor in New York or Miami isn't getting a call at the middle of the night. They're there to sort out the issues and again, make it hassle-free, hands-off purchase and investment for the buyer. The last piece of the jigsaw that we offer is portfolio optimization, and that's essentially assessing a client's options once they've purchased the unit, 3, 4, 5 years down the line. What are the different options for the client? Is it something like selling the unit, realizing the gains and looking to invest somewhere else? Is it probably our most popular option, which is releasing equity and then looking at purchasing more units by recycling the capital? Again, we've got the sales and support that can help clients with that and ultimately help clients build multi-unit portfolios. To touch on the UAE as well, one of the huge benefits of the UAE is, of course, the Golden Visa. It's not something that the UK offers, but it's certainly one of the key drivers as with why we've seen such a huge investment into the UAE over the last 5 years. To touch briefly on the size of our company and the stature that we operate, you can see that we've seen some significant growth over the last 4 years. In total, we've delivered over £2 billion worth of development value with over 5,000 units. Last year, we sold over £250 million worth of real estate. Primarily, 80% of that was probably situated in the UK. For me, what makes me very proud to say is that 35% of our business is from repeat buyers who've had a great experience with us, who want to add to their portfolio. I'll pass you over to Lewis now, who can touch a bit more about our upcoming events in the US in the next couple of weeks, touch on the UK as a whole, and then some of our flagship developments that we're currently working with developers on.
Thanks, Johnny. Just to confirm, you can hear me now, Johnny, yeah? It's not on mute anymore. So yeah, guys, thank you. Just to give a bit of an intro, because no one could hear me before. So my name's Lewis Finn. I'm the Global Sales Director for API Global. I've been involved in sort of offshore finance, wealth management and real estate for the best part of 15 years now. And as Johnny mentioned, it's our job as API Global to essentially secure, package and then distribute global residential investment opportunities. Historically, what started in the UK, and we've done that for around 12 years now. And more recently, we've ventured into other territories such as the UAE, Bali, as well as Thailand. But the UK will always be our main bread and butter. I think it's quite relevant being on the call today, especially with a lot of you being situated in the US. The US was actually the largest investor into the UK property sector in 2025. A lot of that isn't just with institutional buyers. Obviously, you've got the likes of Blackstone, which I think are now finding it difficult, or asset managers find it difficult now to purchase bulk opportunities across the US. I think there's been changes in that happening. However, we're not only seeing the institutional investors and sort of the funds and sort of the pensions coming in, but also from a individual level, we're seeing a lot of US capital moving out of the States into the UK for a number of different reasons. Obviously, the dollar has been fairly strong over the last sort of 2 to 2.5 years, given where the pound's been and sort of global, I wouldn't say global instability, but I suppose global uncertainty about what's going on. So we've seen a lot of US money move into the UK, and obviously off the back of the US making changes with the asset managers and sort of buying up these sort of large multifamily homes and single family homes, they're looking for other destinations and opportunities as well. And with that, it's great to see, because from an investor perspective, it's just tying up all the supply. Okay, the demand in the UK is constantly increasing. And we don't really see that going away. But Jurgen's put on their Trump. It's not just the Trump, but the supply coming to market. It's really getting less and less now, and there's a number of different reasons why. Obviously, you had changes in planning reforms in the last 18 months in the UK, which have made it more difficult for developers to go through planning. You've got additional health and safety regs, building safety regs, which are delaying developments getting built, which again is great from an investor sentiment, because while supply stops, that demand constantly increases. I suppose when we look at any investment opportunity, when you've got more demand than supply, prices will continue to grow. Okay. So what we're doing this year is we're having a huge focus in the US based on previous opportunities we've seen with existing buyers there and relationships we've already got. So we're actually having our first trip to the US in the next 10 days. We fly Sunday the 22nd, and we'll be in Houston from afternoon the 22nd until the 25th, and then we'll be in Miami from late 25th until the 28th, where we'll be doing one-on-one meetings for clients, for any partners that want to understand more that can't make the events. The events you can see on the screen in Houston will be at the Nobu in Houston. The Miami one we are just finalizing now, as there was a slight change in venue as to what was previously agreed, but we'll be sending out all the invites very shortly. Okay, but if anyone on the call has any questions, just let me know and we can send out the invites separately so you've got all the information to hand. Okay, so let's focus on the UK today. I know we had a webinar last week which focused very much on the UAE, but I want to give you a bit of a background about the UK. This is where we sort of made our name in the industry globally, and sort of reasons why. Okay, now we focus on just three main cities that we focus on, which are not just the three biggest economies in the UK, but arguably across Europe as well. London being the capital, and not just the capital of the UK, it's arguably the capital of the world, or certainly up there, as the sort of most historic and sought after city to invest into over the last sort of 50 years. We then go slightly north and we look at Birmingham. And for any NFL fans on here, we will have, or you may know, Tom Brady is the owner of Birmingham City. And then we go even further north and we've got Manchester. Now, Manchester is arguably the most sought after investment hotspot, not just in the UK, but in Europe over the last 5 years. And it's as big as a brand as Coca-Cola now, because you've got so much influence coming in from global foreign direct investment. So you've had obviously the influence of Abu Dhabi that own Manchester City Football Club. So the Abu Dhabi royal family have invested a huge amount of capital into that local economy. You've obviously got Manchester United, which unfortunately for me as a Liverpool fan is still a huge football team on a global platform that pulls in billions of pounds on a yearly basis, and all that's invested into the local economy and how you can grow and expand. 2 years ago, we partnered with one of the best developers in the UK, Salboy, and Gary Neville, who is a Manchester United and England footballer. That was to deliver the W Hotel and Residence, which is part of the Marriott Group. And in the next few months, we'll also be delivering, in line with Robert De Niro, Nobu Residences, which will be the first Nobu branded residence in the UK. So they're the three major cities that we focus on. But then we have what we call tier 2 locations or tier 3 locations, whereby we follow the same trends or concept and sort of macroeconomic drivers, but slightly on a lower scale, which therefore make it more accessible for investors. So rather than having to invest, let's say, $100,000 in one of those three other major locations, you may be able to get into an investment for $50,000 to $60,000 if you look at a smaller entry-level price point or a tier 2 location. What I'm going to mention today is tier 2 locations and tier 1 locations just so you can get the feel for it and how we can help investors access what potentially could be a foreign market to you all, and really apply that sort of end-to-end solution. But come back to what I was saying before, the reason why we focus very much so on the UK is that, well, first of all, it's the most mature market globally, i.e. you've got over 100 years worth of data, and data is what helps us drive our decisions to where we consider is the next best investment opportunities. We look at all sorts of macro and microeconomic fundamentals. So we look at areas where you've got a growing population and ultimately what aids that population growth. Now, for us, the three key drivers are education. So we look at big university and college towns and cities, but more so areas that retain a high percentage of graduates once they've left that higher education institution. I'm sure the US is the same as the UK and other parts of the world, and that typically students going through college or university don't normally save any money. They probably spend 3 or 4 years partying and having a good time. They take out credit cards or they get student loans, okay? Now, if we focus on locations that are retaining graduates post-education, naturally that means that graduate retention population has to rent. That creates a natural demand in that local economy. The second point we then focus on is transport regeneration and development. So the use of motorways, railway lines, metro links, even airport expansions to a certain degree, and how we can really make it attractive and appealing, but also accessible for individuals to get from point A to point B. And by doing so, have people move to those locations. And then the final point is corporate behaviors. The corporate business districts, the central business districts, where are companies relocating to across the UK, and not just making their workforce redundant, but offering relocation packages. Now, whether those individuals are buying or renting is almost irrelevant. They need somewhere to live. Again, that just creates a huge demand in that local economy. So just to give you an example, Birmingham, which is actually the second city in the UK, the second largest city. As I mentioned, Tom Brady owns Birmingham City Football Club, or is part owner. That's now really the financial hub, the financial district for a retail banking sector in the UK. You've had the likes of HSBC, the People's Bank. You've had Deutsche Bank, Goldman Sachs. They've all relocated their retail headquarters from Canary Wharf in London to Birmingham city centre and really drive that Midlands engine. They've relocated tens of thousands of employees. They've taken offices which are tens of thousands of square feet. And it creates a huge demand. It creates jobs. It adds more money to the economy, greater taxes then being applied, and ultimately allows that economy to get from here to here and add that more regeneration and foreign direct investment coming in. Most importantly, the UK market is regulated and secure. So whether you're dealing with solicitors or conveyancers that will help you transact on the property, they are regulated. Whether you're dealing with a mortgage broker or the lender or the bank that are facilitating loan for you, it is regulated. The lettings and management companies that you use have to have regulated approaches and are compliant when dealing with collecting your rent for you. It's all safeguarded. But most importantly, the developers that we work with have stood the test of time. They've been around for decades. They're well capitalized, and they've delivered on millions and millions and millions of pounds worth of development, which have ultimately seen our clients make a huge amount of money, not only from a capital appreciation perspective, but naturally with that, we see great rental income as well, which is equally as important depending on the investor type that we're dealing with, okay? So I just want to give you an example of some of the projects that we have. Now, what we will never do at API is try and force a particular development across to you or your investor. We're very much of a consultative approach. We want to educate investors globally as to what's your strategy, what is it you're looking for, what's your risk profile, what's your appetite to off plan, to complete, what typical yields you look for. Let's benchmark it against current investments you've got. And then we reverse engineer it. Okay, so it's not one size fits all. We may have an investor in Miami that's looking purely for capital appreciation and wants to have stage payments during construction. We may have an investor in Toronto, in Canada, that wants income today because they're at retirement age. They don't want mortgage. They don't want to take on any debt. They want to buy the asset outright, let that appreciate naturally over time, but take that higher rental yield. That's everything that we'll assess during our initial consultation, as well as what your tax liability or exposure is and the best angle or way forward to how we can mitigate taxes completely moving forward, really. So an example that we've got on the screen here is one of our flagship developments that we've recently launched. We're still in the early bird pricing at the moment, so I'm sure it works the same in the US and other parts of the world. As the development progresses during construction, the developer will typically increase the prices along the way. Now, because we're in the early bird phase or the initial launch, we've got the best prices because anyone that gets in at the start makes the most money over construction, okay? So just to give you all a bit of a background base, I won't go into too much detail because I appreciate a lot of you won't be aware of certain developers or maybe locations that we have on offer, okay? But here's a development called Cathedral One. It's waterfront living. Now, I'm sure, again, it works the same in the likes of Miami or in different parts of the US. Waterfront apartments or properties typically hold their value significantly more so than ones that are situated more inland, okay? It's got that more sex appeal to it, I suppose. So the developer behind this development is Wavensmere Homes. Like I said, this is an off-plan development. So what I mean by off-plan, it is during construction. So you can put down lower amounts of deposits over the build time to allow that return on investment to be even higher than what it would be if you were to buy something completely upfront, okay? It completes in Q4 2028. So we have a 2.5-year build, and there's 195 units in total, which are comprised of studio, 1-bed, 2-bed, and 2-bed duplex apartments. Now, yield-wise, we look typically at a 6% yield as an average, really, to make the numbers work for us. In Derby, because it's that slightly lower price point, what you get in a lower price point, you typically get a higher yield. We are achieving or will be achieving around a 6.5% gross yield. And that is based on sort of comparables and market data that we have done from selling previous developments in this location. As I mentioned, waterfront living, okay? You can see the development here right in the middle. Now, again, if we just refer back to sort of that concept or that macro and micro economic drivers that I mentioned, let's refer back to Derby, okay? So it's got a huge student population. About 3,500 graduates stay in the city centre every year. Now, if you look at Derby, particularly as a city, it is impossible to build 3,500 new properties every year. So naturally, we've got that constant supply and demand imbalance. We've got more people staying there than properties coming to market. We then look at the connectivity angle. Now, from the development, you're less than a 10-minute walk away to the train station. From that train station, you are 25 minutes into Birmingham. You are 17 minutes into Nottingham, which are two of the biggest sort of engine drivers across the Midlands. You are just over an hour direct into London, and you are 52 minutes into Manchester. Like, these are the northern powerhouse cities with a short commute into one of the capitals of the world, being London, which is also the capital of the UK. But more importantly for me, it's what's actually driving the economy. What is pulling individuals or employees to a certain location, which is going to add value. It's going to increase the GVA. It's going to take more taxes. So then we look at the employers. We've got the likes of Rolls-Royce, who have over 13,000 employees based locally. Rolls-Royce have just taken on a £9 billion contract with the Ministry of Defence that will supply. What you've got to remember about Rolls-Royce, they're not just building cars, right? They provide engines for submarines, for aeroplanes. They're not just a one-trick pony. They're a huge, huge corporate globally. They take on over 250 interns on a yearly basis. Again, postgrads from the universities that are based there. And Derby really is that sort of innovation hub of the UK. It's also the most central part of the UK. So when we're looking at proximity to these different major locations and cities, it sits right bang in the middle. Unfortunately, you've got a river, the River Derwent, that you can see on the screen, that runs through Derby, which is why we've been able to position the location of our development right on the waterfront, which I'm sure you'll all agree will be an absolute cracker when we look at sort of the appreciation compared to more inland developments. So just to go back, on the Derby development, so Cathedral 1, the prices start from £167,000. So to invest into this development, you need £33,400. Now, when we convert that to dollars, you are looking at around $45,000 as the initial down payment. Now, I'm sure a lot of you on the webinar tonight will probably be thinking, that's really, really well priced. That's a really low entry point compared to some of the property that I may be buying elsewhere, not just in the US, but globally. But when we can get into one of the most up-and-coming cities in the UK, in the centre of the UK, which has all these sort of pull factors to it for under $45,000, it becomes a really, really compelling investment case. Okay? On completion, you then put 80% in. Now, typically for US-based investors, we can achieve a 75% mortgage. So you can borrow 75% from the bank. And again, we've got the in-house mortgage team that'll take control of everything for you, really to make it a hands-off, hassle-free approach. Now let's go into the capital, okay? London, which, to be honest, a lot of people have shied away from London over the last sort of 2-3 years. As a business, we've shied away from it for slightly longer than that. We look at investment opportunities, okay? What we're not is a estate agency. If someone comes to us and say, I want to go and buy a 3-bedroom house in St. John's Wood, as an example, we're not the company for you. What we are investment specialists. So we find developments in areas which are up and coming or going through the region, which are going to provide the best return on capital for you. So we typically don't focus on Zone 1 London, albeit we do have some developments there. We want to focus on areas where you're getting in at a lower price point and you have the option to get in at first. So if we get into the initial stages of master plans and so on and so forth, you're going to get the most growth over the build or over that regeneration period. Now, for us, Claremont Quarter in Cricklewood is an area that we've identified as one of the prime regeneration hotspots in London. Cricklewood was actually voted as the #1 hotspot to invest into in 2020-25. And I'm very pleased to say that this development that you can see on the screen, which is exclusively sold through API Global, was actually the most sold development in London across Q3 and Q4 of last year. And that's in reports online from the Mollier Group as well, if anyone wants to sort of go on and verify that. But again, let me just give you an example of how this development would work. The starting price point for 1-bedroom apartments are £439,995. So to put that into perspective, if you would want to get into this development, when we look at US dollar terms, you'd be looking at an initial investment of around $58,000. Okay, this particular payment plan is 10% down, 90% on completion. So what we typically find with London is that the price points are slightly higher than other locations and cities, but the payment plan is more attractive or accessible because you're putting down a lower amount. Okay, now you've got 3 blocks on the screen that you can see here, 251 units in total. The 2 blocks that we're selling globally at the minute is this one on the front left, which is block 1, and this large block on the back, which is block 3. Block 2, we've actually already sold to one investor, which went as a bulk deal, which went through our capital partners business, which focuses on family office and institutional deals. and that was sold off to an investor in Singapore. Now, Block 1 actually completes at the end of this year, going into early 2027, and Block 3 at the back completes at the end of 2027, going into 2028. So depending on what type of strategy you're looking for, would depend on what block you want to focus on. If you're wanting something where you want income sooner rather than later, you would look at Block 1. If you want to sort of get more capital appreciation over the build time, not worry about locking in or securing your mortgage right now, and you want to see how the market plays out over the next 18 months, 2 years, then Block 3 would be the best option. I can see Luke has actually put in the comments, can I use US banks? US, as far as we're aware, US banks won't lend on UK property. Now, if you have banks that have a global presence, so a HSBC as an example, then if you have, let's say, a Premier account with a HSBC in the US, you would also be able to open up a Premier account with HSBC in the UK, and they would be able to facilitate the lending. But even if you can't do that, then our mortgage team in-house has around 85 different lenders on their panel. So whether you're a US resident, whether you're a resident of Africa, of Spain, of Russia, wherever it may be, we'll be able to get you lending. It will just be different options to someone based elsewhere because you've got different lender criterias, different lender risk profiles, so on and so forth. Okay. Yields, London slightly lower than the regional cities, naturally because the capital values are slightly higher. But what we're seeing in London, and this is really why we've gone into London quite aggressively over the last 18 months, 2 years, is that we've seen a huge rebound post-COVID. So again, what we specialize in is identifying the right opportunities at the right time in the right location. We stayed away from London for a number of years because capital values become stagnant. COVID, a lot of people left London and the capital because they wanted more space. They wanted to live in more green, leafier suburbs, let's say. So they moved to sort of the surrounding counties. Post-COVID, everyone's moved back into the city, right? You had a lot of employers say, we're going to dock your salary 20% if you want to do this work from home sort of mindset and concept that some people still apply today, which I do find slightly strange. I know I certainly couldn't work from home constantly. But employers were saying they would dock salaries by 20%. Now, people can't afford to lose that, right? They've gone back into the office. Now, people going back into the offices, naturally, they want to be based near whereby they work or certainly have great access to their offices from train lines and metro lines, whatever it may be. Okay, so we've seen a huge increase in rentals because we've got more demand coming in, and it's a well-publicised fact that London supply currently is suffering. Zone 1 has took a bit of a dip because you've had a lot of people sell, but when you look at the regeneration areas that we focus on in business, your Zone 2, Zone 3, Zone 5, you do not have enough properties coming to market, but these are the areas that are affordable for a lot of people, investors and owner-occupiers, and they're areas that have great connectivity. Okay, so let me go into an example here. What I consider Cricklewood as, which is a Zone 3 area of London, is that it's Zone 1 connectivity with Zone 3 pricing. Okay, from Cricklewood Development, Claremont Quarter, you are less than a 5-minute walk to the train station, and from the train station, you are 13 minutes direct into central London. That's an unbelievable stat to have as an investor, because the accessibility to the major business districts, where you've got hundreds of thousands of individuals working, are a 13-minute train journey away, followed by less than a 5-minute walk. You're in that catchment area, which makes it attractive and appealing. And like I mentioned, Zone 1 connectivity, but at Zone 3 prices. And then the last development I just want to give you an example of is Birmingham. So where Mr. Tom Brady has become a shareholder in Birmingham City Football Club, and is he a contributing factor to the US investing money into the UK? I think he is one of the contributing factors. If you put the asset managers and the institutions aside, if you look at more retail and individual investors, I think having such a prolific figure going into the UK the way he has been a massive eye-opener for a lot of US investors, and with that we've seen a lot of people follow suit. So the development I've got on the screen here is our flagship development in the Midlands. You've got 2 phases, 278 units in total. You've got Boulevard, which is phase 1, which is this large tower at the front here. And you've got Origin, which is phase 2, which is the smaller blocks at the back. Now, the developer behind this development is Investing PLC. It's a gentleman called John Downer who lives in Monaco. We've done extremely well. We've worked with them for a number of years now. This is our 9th development with Investing PLC. And they deliver absolute quality and deliver ultra-high spec for investors and residential occupiers. Now, just to give a bit of background about this development, phase 1, we sold 2 years ago, and that came to completion at the end of 2025. And investors have seen a huge increase and ROI in the capital that they've invested. Phase 2 is Origin. Now, that was being originally kept back as what we call BTR, which stands for build to rent. So the developer would build the development, they rent it out themselves, they take the income, and then typically what they'll do is they will sell it off at the end to a pension or an institution once it's hit a certain yield profile, okay? Now, the build-to-rent market in the UK over the last sort of 12, 18 months hasn't been as strong as what it's been previously. And the buyers coming from the US, when we look at the asset managers like Blackstone, have stopped targeting the build-to-rent sector and started to target the build-to-sell sector, like phase 1. So Investing PLC then came to us and said, listen, you guys have done an unbelievable job on phase 1. We also want you to now sell phase 2. However, what you will typically find is that a development that's come to completion can be slightly more challenging for an investor to purchase purely on the basis that you require more capital upfront at once. So when you buy off plan, you buy staged payments, right? So let's talk about the Cricklewood development that I mentioned before. On block 1, it's a 10% down payment. You pay nothing until completion at 90%. If you're buying block 3, it's 10% down. You pay 5% in 6 months, and you pay 85% in 18 months' time. That's really accessible for a lot of investors. However, when you buy something that's completed, you require that full capital up front, which is typically around a 25% deposit, and then your fees can be anywhere from sort of 10 to 12%. Now, your fees are made up of what's called stamp duty land tax, which is the tax that you pay the government in the UK for purchasing the property, and it varies depending on the level that you buy at. You've then got land registry fees, whereby you have to pay to get the title deeds in your name, and you've got associated solicitor fees and mortgage broker fees, okay? So one of the most challenging aspects of buying property is having all the capital now to go and buy the asset that you want. So what the developer has done for Boulevard and Origin is any investors that are buying in February, they are paying the stamp duty for the investor, which saves around 9.5% to 10% based on the prices that we're currently selling at, which is huge. That's essential because when you look at purchasing property at the moment, the stamp duty that we pay, the stamp duty land tax, it's something that you can't get around. You have to pay it. But unfortunately, it's dead money. It goes to the government. They spend it on whatever they spend it on. But it's dead money from the investor's eyes, okay? If you can now pay away essentially 10% less, that's additional growth and ROI that you've got against the capital that you've invested. But that 10% that you've saved could also be redeployed into something else. One-bedroom apartments in this development start at 243,750, so £243,750. When you convert that to the initial down payment of 15% on this development, when you look at the dollar terms, you're looking at just shy of $50,000. Okay. So again, very accessible and very attractive and appealing for, I'm sure, most of you on the call, regardless of where you're from. I can see, Mississippi on there, Mexico, Miami as well. And I think someone's also from Turkey on there. So it's good to see we've got a global audience on the call tonight. I didn't want to dive into too much of the developments, into too much detail. It was more so to give you all a bit of an understanding as to why we look at certain locations and how we identify these are the right areas to focus on. Again, here's just a great indicator as to the regeneration that we do, and sort of the research that we do when identifying opportunities. You can see here where my cursor is, you've got in the screen, bottom right, it says Origin. That is the master plan of the development, 278 units. Where the tall building is in the center, where my cursor is now, it says Radisson Blu. That is the city center. So we are right on the ring road, right on the periphery of the city center. However, because we're just, a 10-minute walk away from the city center, we're getting in at prices which are around 15 to 20% less. So purely looking at an investment perspective, which is what we focus on, we're not an estate agency, we're investment advisors. We advise on global real estate. We look at what gives you the best return on capital, and typically finding locations which have great proximity to the business districts, the transport links, and the graduates where they stay fundamentally gives you the best return on capital. And Johnny, if I can hand over to you, please.
Yeah, sure. Lewis, thanks for the insight into some of our flagship projects. It was great to hear, and hopefully everyone on the call found it insightful as well. You'll see a QR code on the screen. That is a link to book a one-to-one meeting with myself and Lewis. Essentially, this is just to understand a bit more about you personally, get to understand what you're looking for and your requirements are on a one-to-one basis, and talk you through some of the options that we have available to you. As Lewis mentioned, we are coming over to the US for a bit of a roadshow towards the back end of February. So we look forward to meeting you, as many of you, in person when we're over in the States. But yeah, as I said at the start of the call, thanks for everyone's time in joining today. I understand, it's an hour out of your day, but great to see so many of you taking an interest into UK property. And yeah, I'll leave the QR code on the screen for the next couple of minutes or so for anyone who wants to book in one-to-one meetings. As Lewis mentioned, on the Birmingham development, the Boulevard and Origin scheme, the stamp duty saving is an incentive from the developer throughout February. So if you are looking to get a bit more information on that, then yeah, let's touch base early next week or the end of this week, and we can certainly go through some options. So I'll leave the QR code on here. Thanks again for everyone's time, and we look forward to catching up with you on a one-to-one basis. Thank you.